What can I say? The price action in the stock market has definitely not been boring lately. By the end of August, we managed to recover from the entire 7.6% drop, even finishing the month in positive territory at plus 0.1%. Sadly, that was not the end of it though. As it stands, the market dipped again, this time close to minus 2% in September. Before we take a look at why this may be another difficult month to get through, let's take a look at where the ETF portfolio share with my wife currently stands in actual numbers. Including the most recent dip, we're now up close to 11% or about 35,500 euros in 2024. For a total return of plus 90,600 euros since we started investing in ETFs 7.5 years ago. As for our average yearly return, it currently stands at a respectable 10.65% per year since 2017. Okay, so while September seems to be turning into a more volatile month once again, we should keep in mind that global markets have basically been up 7 out of the 8 full months so far this year. September actually tends to be one of the worst months for stock market returns in general, posting negative returns for the past 4 years in a row for globally diversified ETFs, ranging between minus 1.3 to minus 7.2%. And if we're just looking at US stocks directly in US dollars, it gets even worse. In September, the S&P 500 lost 5% in 2023, 9% in 2022, 5% in 2021, and 4% in 2020. So I wouldn't be surprised to see the market cool off a bit before continuing its rally to new all-time highs, further fueled by the upcoming first Fed interest rate cut in 4.5 years this month, as well as the presidential elections in the US in November. Now, does this mean you can time it by waiting on the sidelines and only investing in historically stronger months like October, November, or December? I wish it was that easy, but sadly that doesn't work in the vast majority of cases. It's simply impossible to successfully predict which direction the market is going to move in the short term. When investing in ETFs and the stock market in general, you're going to have to endure difficult periods when the market is down as well, if you want to collect the market's attractive average yearly returns over time. To better illustrate this point, since 2003, a global FTSE All World index was up 64% of the time on a monthly basis, but as much as 80% on a yearly basis. The more you zoom out whenever you're feeling uncertainty and the longer your time horizon, the better your chances of collecting the market's average returns over time. In this example, 9.1% per year for the FTSE All World since 2003. Speaking of ETFs, there are 2 more things I need to mention. First, you can find the best low-cost brokers in Europe to buy ETFs down below in the description, which is also a great way to support me if you'd like to. And second, if you haven't seen it yet, make sure you check out my most recent video about securities lending within ETFs after you're done with this one. Some of the discoveries I made there, especially regarding the differences between fund providers like Vanguard, iShares, Invesco, Xtrackers, Amundi, and Spider, were very surprising. Okay, now let's quickly talk about Trade Republic, one of the brokers I use the most, not only for ETFs, but also as a high-yield savings account. Here, I'm still able to get the exact ECB interest rate of currently 3.75% per year on my uninvested cash, secured by a 100,000 euro bank deposit guarantee. That earned me a record 83 euros of interest in August on my savings, plus once again an extra 15 euros from the 1% Saveback using the Trade Republic card for our family's expenses, which was invested into the Invesco FTSE All World ETF. As for my small speculative allocation to crypto, which has honestly become less and less fun to talk about over the past couple of months, Bitcoin was once again very volatile, finishing up around 3.6% over the past 30 days, and now sitting at a year-to-date return of 33.6% so far in 2024. While this means it's still my best performing asset this year, Bitcoin has significantly underperformed the stock market since the middle of March. Based on its historical returns during previous market cycles, I do have high expectations for the 4th quarter of the year though. But compared to how well the year started with the launch of the ETFs in the US, right now there's clearly very little excitement in the space. In fact, most investors seem to be fearful at the moment according to Bitcoin's Fear and Greed Index, which counterintuitively means it may not be a bad time to keep cost averaging into this highly volatile asset, which is what I'm doing. We'll have to wait and see if it manages to hit my high expectations by the end of the year. Just please keep in mind that Bitcoin is highly speculative and things can always move in either direction, so make sure you limit it to a small percentage of your portfolio in line with its elevated risk, if you decide to hold any at all, as it's certainly not for everyone. Alright, that's pretty much everything that has been going on with my investment portfolio over the past 30 days. I'm expecting a lot of volatility over the last 4 months of 2024, but I'm feeling bullish overall regarding my investments. As a result, my wife and I are sticking to our simple investment strategy where we simply buy a single ETF, the accumulating Invesco FTSE All World on a monthly basis as an automated recurring investment. Plus, whenever I have additional cash to invest, as I'm self-employed and thus get paid at random times throughout the month. How do you guys think the rest of the year is going to go? Let me know in the comments. Before I take off, don't forget to gently tap the like button and to subscribe if you haven't yet. If you'd like to support me, feel free to use my links in the description below to the best low-cost brokers in Europe for ETFs and other financial tools I use. None of what I talked about today was of course meant as investment advice. I'm just openly sharing my personal opinion based on my own experience as an investor. And lastly, if you haven't seen it yet, make sure you check out my most recent video about securities lending within ETFs next, where I made some shocking discoveries. No other YouTuber seems to ever have looked at this in detail for whatever reason. That's it. Thank you guys so much for watching, have a wonderful day, and until next time.